Hi everybody, welcome to a very special video. Today you are going to learn how to exactly do spread trading. You're going to learn about 1, 2, 3 option strategy. Too easy, too profitable. What's the catch? Also, in the current market situation, it's really relevant. When market is full of surprises, market is going gap downs, there is tremendous volatility, and what I think that in the coming time, this volatility is going to increase. So all these strategies which were basic like short triangle, iron condors, these strategies are going to get into trouble very fast. So the time demands that you learn something which is better, top shelf, keeping your risk profile really low and trade like a pro. I'm going to show you how easy things become once you learn the better techniques. Obviously, you come on this channel because you want to learn about smart techniques. Number one issue in the current market situation is gaps. Market has been giving gaps. It's brutal. And also in the coming time, there are going to be a lot of gap downs. That's what is expected because all the bad news is coming from US markets. And if you're watching this video and you trade US markets, you got to learn hedging because giving stop losses to the market by doing hit and trial, this is not 2005. Right? Math behind option spread is what you're going to learn, which going to remove your gap down fear completely. I promise and I deliver. Let me show you what I mean. So here we are on an option simulator. You can use any option simulator of your choice. First thing which we are going to do is that we buy an at the money call around 30 DTE or monthly options you can call it. We buy at the money. Done. After that, we have to sell a call which is further out of the money. Now, what is the rule? Which call to sell? Let me tell you, the risk and reward ratio should be 1:2. You can trade Bank Nifty, you can trade Nifty, you can trade SPX, SPY, whatever you like. But your first spread should give you 1:2. So maximum profit is roughly 41,000. Maximum loss is 23,000. Easy, everybody can do it. Now, once you selected the strike, the same strike which you sold one lot, the same strike, we buy 2 lots. Okay, this is the rule written in stone. Okay, no changes in this, no experiments in this. Once we do this, after that, we have to take out a 50% value of the call which you sold. Okay, and we have to buy 2 calls. Why? Because you sold 2 calls, and obviously we don't want to do unhedged risky trading, so we buy this. 50% value. We sold 60, we bought 30. How easy it is? Very easy, right? There is a logic behind this. Why are we doing this? There is a strong logic. Once we do this, now 80% job is done. We have to take out a 50% value of the call which you bought. Take out, right? Can be anything, 15, 20, 25, anything. Then we sell 3 calls now, and we made our strategy, which looks something like this. What do we see? Some things really should pop out. Number one, if market go down, the risk maximum is minus 19,000, but not an issue. As you know, we're going to do some adjustment. This loss, we can really reduce it by 80, 90%. There are ways by which you can do it. If market go up, reverse up, then you know that the peak profit is 58,000, which is incredibly high. Forget 58, even if we get half of it, even if we get 30,000, we are doing incredible job. Do we have any fear for gap down? No. But this is just a 50% information right now, because now I'm going to show you a real bullish month. How do we do it? Then we're going to talk about what worse can happen is probably market go down by 5, 6, 800 points. But not an issue. We are here to learn the tricks. And that's exactly what I'm going to give you. So let's test it out. Let's understand in the real world scenario what is expected out of a strategy 1, 2, 3. Now be fully focused because I'm going to show you an incredible bullish month. Because if I just show you a month which went up and closed 300-400 points above, is going to be crazy amount of profit. I don't want to do that. I want to show you a crazy bullish month because I'm sure most of you must be thinking, what if market go here, then what's going to happen? Obviously, for beginners option traders, I've picked this. Now you see this same thing which we do, exact copy paste, not a single thing change. First, we make a debit spread 1:2, like I explained you 1 minute back, and then 50% value, we buy, and then we sell 3. 50%, 50%, 50%. So 1, 2, and 3. 1, 2, 3 is the strategy. Now let's see. Obviously, December was incredibly bullish month for us. So if market go up, we obviously expect to make good amount of ROI, right? And you see here, market is really shooting up and making somewhere around 3% to 4% in a highly bullish situation. It's quite easy. As you can see here, market is going up and we can book it now. Why we can book it? Suppose if you make 4% in matter of 3 days, 4 days, that really is a piece of cake, isn't it? But the question arises, if market really rocket up, what's going to happen? Now, as you can see, obviously we are in green zone and we are in a very comfortable environment. And what do we see here is that we make incredible amount of ROI, because remember, we buy 3 and we sell 5. So technically what you see here is that we bought 3 and we sold 5. So we have 2 extra calls. So margin out of the money when you sell 2 calls, that much amount of margin approximately it's gonna take. That means if you make approximately 11,600, that comes out to be a significant amount of ROI in just 11 days. If we make, that is a good thing to do. But now I know what you're thinking, that what if market go down very fast? Then exactly what do we have to do? Remember, the job of an option trader is to remove all the fear and trade like a proper businessman. Businessmen don't have hopes only. A successful businessman always have a plan and they look forward to learn better techniques and change with the time. Serious traders usually take the next step. And if you are somebody who's serious about this option trading business and you think now that the time have come that you should learn better techniques, the top shelf stuff, then all you got to do, you can always get in touch with the team and you can get all details about how you can learn the proper technique of options trading, how you can protect yourself, how you can really take your profit super big. So those techniques are available. Now I'm gonna tell you the bearish month, your favorite. Let's see what happens then. So we have an October month here, and as you know, October was crazy. Market really fell like a knife, but there is not much of an issue here. And what you see is that market is going down. Let the market go down, that's absolutely fine, because your maximum loss is kept. But get ready, I'm gonna tell you something very special. Okay, now here what you see is that market has really gone far from where the strategy is. The strategy is not even visible because market has come down so much. And if you wait a little more, as you can see, that market is really drifting down. Now in this situation, what a trader needs to do? Obviously, you can move your calls towards the market. You can obviously, make your loss, which you see 49, which is very tiny. You can cut it in half. It's very easy. Just bring your calls down or sell additional calls and this loss is poof. That's not an issue. But I'm going to tell you something advanced. Now here, does market go down like a knife and just market never rebounds? I have a question for you. Will it ever happens? Even in Corona times, market gapped down and market bounced. Gap down, bounce, gap down, bounce. This is the nature of the market. You know it very well. Now, when market is falling so fast and you are making some amount of loss, which is 49, provided that you do no adjustment and you just seeing this loss, there is no panic setting in. Can't we square off our entire trade and make the same exact trade now and wait for a retracement? Is it ringing any bell? If I square off the trade right now, and if I make the strategy immediately, and if market rebounds a little bit, maybe 1%, 2%, you know very well, in 2%, in the previous example, we immediately got into profit 11,000, 4% profit. Think about that. Well, I try to give you whatever I can give you on YouTube, but obviously I have limitations and you understand it. I try to give you the techniques which I learned over 15 years of trading in options. And if you can relate to what I'm telling you, there is happy times ahead in such chaotic, crazy markets. Because when market is just sustaining, market is not moving, any Tom, Dick and Harry can just sell a call option, put option and theta DK and life is good. But the real test is in the difficult markets, and we are entering in a really tough age because of global economy. So only the top class strategies and techniques is our savior. Now I want to tell you more about this because I've built your base. Time to take you to the next level now. VIP points, everybody's favorite. Doing it in reverse is not recommended. Now I'm sure 99% of people must be thinking, why don't we do both sides? We do call side and we do put side as well, and that's how. Let me tell you, that is super dangerous. That can be really deadly trade. I wish I can tell you why you should not do it on the downside. Obviously, one of the reasons is that market can give you a crazy gap down. When the last time you saw without any event, market just gave you a gap up of 4%. When the last time you saw, but there are a lot of gap downs which happens in the market. So please before you have this misadventure and lose thousands, probably lakhs, I stop you and I tell you that it's not to be done on the downside. Why the upside is more profitable? There's a reason behind this. The downside losses which you see, which is 4,000-5,000, not much, can be reduced by simple rolling. Like I told you, you can simply rolling it, and when you roll your calls out of the money, you take extra credit, and it's very easy. Now you want to reduce margin. That's how. Margin is slightly higher because you are buying 3 and you're selling 5. Now, can't we reduce the margin even more? Of course we can. Absolutely we can. How do we do it? We buy the call out of the money, really further out. We can buy a call which is trading at around 5 points. And as soon as we do it, our margin requirement go down, boom, by at least 40%. That means your ROI is also going up by 40. So the example which I showed you, the previous example in which we made around 11,000, comes out to be pretty handsome ROI. In that, we never did margin benefit. If you do it, then the ROI is gonna be really high. Making a double digit also is not much of a problem. There are people who are making killing in the market, but quietly, because they know something which is different than how public trades. Obviously, risk cannot be zero. It's impossible. Risk will always be in any business in the world. Even fixed deposits are also not 100% secure. I hope you know this. Nothing in life is. But the real option player obviously have better techniques. That's why I say hit and trial way of trading one must be avoided. So many stop losses a person gives to the market probably can use that one stop loss for his own self to learn better techniques, just like you're doing right now. You can elevate your trading game. You can learn the craft in record time. You can get in touch to learn in depth. Just drop a message. You can get details directly from the team. I hope that you learned something really good, especially the technique which I told you, that your losses is capped and market can't just keep on going down. A little retracement can get us into 4% profit quite easily. But when to do it is really an art. I'm sure you can figure that out. I've given you the basic framework. In such crazy markets, I wish you all the very best. And like I always say, you are going to do so well in trading, you will surprise everyone. I wish you all the best. Bye-bye.